A landmark climate bill passes through Congress. The expansion of nuclear energy and more investment for companies at the forefront of the fight against climate change. But is it a game changer or a letdown? In this episode of Bloomberg Green, we'll explore President Biden's climate bill.
I almost think there's no superlatives that capture the breadth and scope and scale of this law.
Find out what's actually in it and where it doesn't go far enough.
From a European or other parts of the world perspective, the thing that's not included here, as I mentioned a moment ago, is a specific hard cap on CO2 emissions or a specific legislated goal.
And look at what more needs to be done to invest in modernizing and greening U.S. infrastructure.
We've had climate goals for a long time. What we haven't had is a plan that's realistic, time-bound, pragmatic.
From Bloomberg's global headquarters in New York, I'm Kaylee Lyons, and this is Bloomberg Green. The Biden administration has taken its biggest step yet to tackle climate change. In August, the president signed the Inflation Reduction Act into law. It's the largest investment in climate action in U.S. history. And according to independent analysis, it could slash U.S. emissions by 40% by 2030. It includes $370 billion of green spending, bringing the U.S. closer to reaching its goals of deep emissions cuts from the power and transport sectors. The Inflation Reduction Act would avoid 24 tons of emissions for every new ton it creates. So in this episode, we'll explore where the bill does well and where it doesn't go far enough, and what else can be done ahead of November's midterms. And we'll look at what all of this means for investing in clean technology. But first, let's dig into the details of the bill and the White House's climate agenda.
What's actually in the Inflation Reduction Act? U.S. President Joe Biden describes his landmark climate, tax, and health bill as the biggest step forward on our climate ever. So yeah, it's called the Inflation Reduction Act, but its impact on our climate is arguably bigger than its potential impact on inflation. The bill contains $374 billion in climate provisions. That includes $60 billion in tax credits for clean energy manufacturing and $30 billion in tax credits for wind and solar power. It also includes incentives for Americans to buy new and second-hand electric cars, and also for those who use heat pumps to warm their homes. Republicans criticized the bill, saying it could mean higher taxes and higher energy bills for consumers. To get it over the line, Democrats had to drop ambitions for paid family leave as well. But still, this is a major legislative victory for the president, especially ahead of the November midterm elections.
So President Biden has taken a big step to address the climate crisis in the U.S., but let's dig more into the details. Joining us now is Jennifer Delowy, our energy and environmental policy reporter in Washington, D.C. So Jennifer, let's just start very high level. What are the key provisions in this legislation?
Well, I mean, this law is just absolutely massive. It contains some, $369 billion that has been earmarked for energy and environmental initiatives. And, you just can't overstate really the breadth of its support for clean and advanced energy. Some of the highlights include, a $27 billion program to basically launch a national green bank and fund regional green banks. The idea there is that this $27 billion is essentially seed money. This bank will lure even more private sector capital and really act as kind of an incubator for clean energy projects across the U.S., including those that are really hard to commercialize. The legislation also, expands and reforms and creates new 10-year tax incentives for all sorts of clean energy ventures. I mean, we're talking about hydrogen as well as solar and wind power, carbon capture systems, and nuclear plants. So there's a tremendous amount of tax incentives here to support clean energy. There's also spending for the Department of Energy's Loan Programs Office, which has been really critical in advancing new technologies. And I can tell you that the folks at the Energy Department are itching to go with that. Really, there's just so much spending and so many impactful provisions layered across this bill. One sleeper item is language in the bill and language in the law, really, that will bolster the EPA's ability to strongly regulate greenhouse gas emissions. So it's a combination of spending and new programs and tax credits, as well as actual language that will help regulate the greenhouse gas emissions driving climate change.
So can you just characterize how big a victory this is for President Biden, who came into office wanting to be a climate president?
Yeah, I almost think there's no superlatives that capture the breadth and scope and scale of this law. This, for the first time, really gives President Biden and the U.S. a fighting chance to actually meet the country's Paris Agreement pledge to slash U.S. greenhouse gases at least 50% by 2030, relative, of course, to a 2005 baseline. Before this moment, the U.S. was really on track to pare emissions only about 26%. And with this law, analysts say the U.S. could actually hit 40%. Now, that, of course, leads a pretty big gulf to fill, and there will be a lot of action necessary even to get to that 40% target. But clearly, the U.S. is now within spitting distance, really, of an emissions target that seemed impossible to meet to some just a few short weeks ago.
And how also does it tie into the infrastructure spending initiatives that already had been passed earlier this year?
Yeah, great question. A lot of this is layered on top of that spending. For instance, in the infrastructure law, you had support for EV charging and EVs and transportation. Here, you have additional credits for electric vehicles that come with some strings attached, but still are going to enable more purchases over, the long term. Again, there's just these two laws are really complementary. The infrastructure law really laid a base of funding for some of these endeavors, and yet left the door open for others. So the law that just passed includes tax credits for hydrogen projects that really were left out of that first infrastructure law. One of the reasons, frankly, that Senator Joe Manchin wanted to push this thing ahead.
Well, on that point, Jennifer, for a long time, we didn't even know if another bill was going to happen. The fate of this climate bill looked very uncertain. And then kind of out of the woodwork comes Senator Joe Manchin, having slammed the brakes on the legislation before. But we now understand that that is when billionaire and clean energy investor Bill Gates decided to get involved. He jumped on a phone call with Senate Majority Leader Chuck Schumer to discuss the bill and had been quietly campaigning for years, lobbying Manchin and other senators on the climate issue. So that gave him reason to believe that the senator from West Virginia would come through in the end. We spoke with him. Take a listen to what he had to say about it.
We were able to talk even at a time when he felt people weren't listening, and I wouldn't have wanted to be in his position. The last 6 months have been challenging. I will say that it's one of the happier moments of my climate work.
So you can hear more of that interview on Bloomberg Green's new podcast, Zero, launching this month. Jennifer was actually one of the authors of that story as well and is still with us. So Jennifer, kind of this unlikely pairing, but Bill Gates clearly maybe made some of this happen.
There's no question that his voice was important, and frankly, there's no question that Senator Manchin was hearing from a lot of influential people, and that includes billionaires and visionary thinkers, if you will, like Bill Gates. But it also includes coal miners in his home state of West Virginia, solar executives in West Virginia and elsewhere that were really in his ear for the last 18 months, convincing Senator Manchin that not only was it critical to address, to move this forward for the climate, but it was also critical for energy innovation across the country, for American energy security, and for his home state's economic revitalization coming out of, coal mining and its rich history with coal.
And finally, Jennifer, obviously a lot of this is domestic focused, but I'm wondering how it translates in an international lens and what kind of credibility it gives the U.S. as it approaches the international climate change challenge.
Well, what's really interesting there is for so long, the U.S. has been kind of an untrusted ally at international climate talks. And to be honest, that predated even the Trump administration's pullout from the Paris Agreement. There have been concerns about the U.S. commitment to these issues for years. And President Biden has tried, with the help of his climate envoy, John Kerry, to restore credibility. This will help. It will go a great deal to showing that the U.S. actually has a shot of fulfilling its, Paris Agreement pledge for 50% reduction in greenhouse gas emissions. It also, shows that when Biden makes a promise, the Congress can be mustered to support those efforts. However, there are still challenges. It's not completely smooth sailing here. It does nothing to resolve a far thornier issue that stoked tension at UN climate summits, and that's really the inability of the U.S. and some other rich countries to make good on their promises to deliver billions of dollars in climate finance to help vulnerable countries and small, poorer nations deal with the effects of climate change and really mitigate the phenomenon. So, that's a challenge. Biden has promised at least some $11 billion each year by 2024. And the question really will be whether he can deliver it, especially if Republicans take control of either the House or the Senate in November.
Thanks to Jennifer Delowy, our energy and environmental policy reporter in Washington, D.C. Now, coming up, we've explored what's in the climate bill, but where does it fall short? And how much do U.S. policymakers have left to do in the fight against climate change? That's next. This is Bloomberg Green. Welcome back to Bloomberg Green. I'm Kaylee Lines from Bloomberg's World Headquarters in New York. It's time now for all the climate news you need to know this week. Let's get to the Green Brief.
Thanks, Kaylee. The death toll from flooding in Pakistan has topped 1,000 in what's being described as a climate catastrophe. The nation has seen the highest rainfall in at least 3 decades, and it's caused over $10 billion worth of damage. The extreme weather follows some of the highest recorded temperatures across South Asia. Also, China is seeing record rainfall in some of its southern provinces, the most in more than 6 decades. It's forced millions of people to relocate, with flooding across the Pearl River Basin. At the same time, provinces in the north of the country have seen abnormally high temperatures, showing the dual impact of climate change on the country. And finally, in Australia, CO2 emissions have risen due to increasing economic activity in the wake of the pandemic. In the 12 months to March, emissions rose 1.5%. There was a reduction in pollution from power plants because of the increased use of renewable energy, but that was more than offset by increases from transport, manufacturing, agriculture, and natural gas production. And that's your Green Brief.
Thanks, Jen. So we've explored the details of what's in the new U.S. climate bill, but how does it all stack up? What's not in it? And is there appetite for more? The Inflation Reduction Act, as it's known, takes aim at vehicle emissions, power plants, and oil and gas wells. But White House climate advisor Gina McCarthy says the bill is just the starting point. So let's get a scorecard of sorts with Bloomberg NEF's head of Americas, Ethan Zindler. So Ethan, let's first begin with what the ultimate goal is, and that is 50% reduction from 2005 levels in carbon emissions by 2030. Crunching the numbers, looking at the contents of this legislation, how close are we going to get to that?
Well, unfortunately, the answer is we'll see, because unlike other policies, this one was not written with a hard CO2 goal included in it. There's no carbon price. There's not a cap and trade market. So there's not a specific goal legislated here that we're trying to achieve. But I do think that the estimates so far, around 40%, seem generally reasonable. There are many reasons, there are many factors that could impact whether the U.S. actually does cut emissions 40% by 2030. We might even do better than that. It's certainly possible, or we might do a little bit worse. There are a lot of factors at play, and not all of them are directly involved with the energy sector. Obviously, how quick the economy grows has an enormous amount to do with what overall CO2 emissions pathways look like.
Okay, so there is some room for error, and even in the best case scenario, in a perfect world where everything goes according to plan, there's still a gulf between what the actual 2030 goal is and what we think this bill may be able to provide in the best case scenario. Given what isn't in the bill, how else are we going to get to that extra 10% we need?
Good question. Although I would say that there's not that much that is not in the bill. It's worth recognizing that what was achieved, first of all, was pretty monumental, and second of all, was actually the absolute maximum that was possible under the political circumstances. Here in the U.S., tax credits have historically been the policy mechanism of choice for subsidizing and supporting the clean energy industry, and that was exactly what occurred here, is an absolute maximizing of tax credits in every possible way, shape, and form. From a European or other parts of the world perspective, the thing that's not included here, as I mentioned a moment ago, is a specific hard cap on CO2 emissions or a specific legislated goal. But realistically, in the U.S., a carbon tax is kind of an anathema here in Washington. And so I think it's very unlikely that we would ever get something at least out of this process this year. So this really was the best, I think, that advocates could have ever asked for out of this process.
And yet there still was negotiation and things that had to be included in the bill in order to get it passed, something we also talked with Jen about. But there's been a lot of criticism about the provisions related to permitting, for example, for oil and gas development, that it does also aid them. I'm wondering if there are forces within this law now that are going to run counter to each other and impede progress in some sense.
Well, I would say that the leasing provisions, a lot like the tax credits, are open to the whims of the market. So in other words, yes, you will have to make leases available, but whether or not drillers decide to bid for them and then follow through on producing from them is another question. They very well may, but if you look at the overall direction of the bill and the requirements that it includes, it is essentially driving us towards a lower carbon economy. And in particular, when you look from the transportation sector in the United States and what the efforts are towards pushing towards electric vehicles, you can see a path where we would really reduce our reliance on oil and gas. And thus the question then comes back to industry, which is, do you want to take the federal government up on that lease? Do you want to drill? Do you want to produce, given the uncertainty around long-term oil demand? I know that may sound ridiculous in a world where we have $90 a barrel oil at the moment, but in the long term, I think there are real questions about how much demand there's going to be for oil and gas.
Ethan Zindler, Bloomberg NEF's head of Americas, thank you so much. So coming up, is the climate revolution being underhyped? We'll hear from the chairman of venture capital firm Kleiner Perkins, John Doerr, and his plans to tackle climate change. That's next. This is Bloomberg Green. Welcome back to Bloomberg Green. I'm Kaylee Lyons from Bloomberg's world headquarters in New York. Solar power will account for nearly half of new U.S. electric generating capacity in 2022. The development of these large-scale projects, supported by Biden's bill, would help curtail the fossil fuel industry. But is there enough private investment to make this a reality? The chairman of venture capital firm Kleiner Perkins says the climate revolution is being just as underhyped as the internet revolution was back in the day. John Doerr wrote the book Speed and Scale, laying out a sweeping action plan to tackle climate change. And he spoke on Bloomberg Wealth with David Rubenstein.
So recently you wrote a book about climate change and the importance of doing something about it. I have it here. It's called Speed and Scale. What's the essence of the book?
It's actually not a book. It looks like a book, but what it is a plan. Because the climate movement has had lots of goals for a long time, but what this is an engineer's plan for how we get from 59 gigatons per year of carbon pollution to net zero by 2050. And the plan is available for free. It's on the website speedandscale.com. There are 6 components to this plan. Andy Grove would call these objectives. Jim Collins would say they're big, hairy-ass goals. But they are, first, to electrify our transportation, use batteries and electric vehicles instead of diesel and gasoline for transport. Second, decarbonize our grid, generate our electricity from wind and solar and safe nuclear instead of from fossil fuels. Third, fix our food systems. Voluntarily eat somewhat less meat, fix our agricultural systems and reduce food waste. Fourth, protect nature. That means stop burning the rainforest and doing deep ocean trawling on the seabeds. Fifth, and this is a hard one, clean up industry. How we create the steel and the concrete that we need for a growing planet is a huge source of carbon emissions and a hard problem to solve. When we've done as much emission reduction as we can for these first 5, there are still going to be some remaining carbon emissions that we have to remove, either through trees, natural means, or direct air capture, which is what they call mechanical trees. All told, the Speed and Scale plan takes us from 0 to 59 gigatons by 2050, and importantly, halfway there by 2030. We have just 7.5 years to get this done in time. And so the plan includes 4 accelerants, ways to make sure that we get it done fast. Those are winning the politics and policy, turning movements into more than protests, making them real actions, innovating, doing more research on the new. So we'll lower the costs for what we have now and innovate for the new, the now and the new. And then finally invest like crazy to get this transition successful.
So let's suppose I live in India or in China, I'm a citizen of those countries. I say, well, you in the United States, you polluted the world for a long time. We're still developing countries. We want the right to develop our economies, and we shouldn't be having the same standards that you have. What do you say to that argument?
I'd say they're right. And I also say that this is a problem that we all have and we all have to solve together. The Indians right now emit far less carbon per citizen than we do. Historically, the US is the world's largest emitter of carbon pollution. Currently, China is the largest, but we're the wealthiest country in the world. And so we've got to go first. We've got to prove that this can be done without ruining the economy. It takes only about 2% of GDP to make the necessary investments. And then we're going to have to, together with China and Europe, help the developing world fund this transition.
And you think that's realistic in the near term?
I think it can be done with a plan. We've had climate goals for a long time. What we haven't had is a plan that's realistic, time-bound, pragmatic, and that's what you're holding in your hands.
So my thinking has been over the years that many people don't support climate change agendas because they think in the end it's going to cost them more money if we make changes, and secondly, they might lose their job. How do you respond to those concerns?
Well, let's talk about both, the jobs and the money. The first is between now and 2030, there are going to be 25 million new high-paying jobs created around the world. And every country should strive and want to get those jobs for their citizens. So there's maybe 4 million fossil fuel-based jobs that would disappear. Those stakes are pretty clear. Now, the next question is, what is the cost? What is the investment we're going to need to make? And the estimates are around $1 trillion per year. That's what the IEA estimates. 2% of global GDP. And what's on the table is who are going to be the leaders in the great new industries of the future.
And suppose President Biden says, you know, John, this is really difficult. I need more help in Washington. Can you come and serve in my cabinet or do something to really make this effort stronger than it currently is? Would you say yes to that?
That would be a very compelling request.
What about your investors? They would say, no, John, please don't leave, right?
I would have to weigh, can I be more helpful outside or inside the administration?
Kleiner Perkins Chairman John Doerr there speaking with David Rubenstein. So we've explored what's in Biden's climate bill, the key takeaways, what it does well, and where it falls short. We've also looked at what's coming up next and the future of investing in the clean energy space. That's it for this week's edition of Bloomberg Green, but you can keep the conversation going by following us on YouTube, Instagram, and Twitter @Climate. From Bloomberg's global headquarters in New York, I'm Kaylee Lines, and this is Bloomberg Green.